Hey, it's Andrew here with Tried True Home Loans. Today, what I want to go over with you is buyer compensation. If you're a buyer, how you can get your compensation for your real estate agent covered and get the house that you want. Let's get into it. So, I created this document. It's basically 4 different plans of how you can get the house you want and finance or pay for your real estate agent, which is the new norm. So let's go into this. BAC here is basically your buyer agent compensation. We're going to go with 2.5%. That's the common amount right now. That's 100% negotiable at any point. This could be higher, it could be lower. We've got purchase price, we've got your appraised amounts. These 2 are important as we look at this. Your loan amount, interest rate, APR, term of the loan, buyer agency comp, closing cost, payment, and cash to close. Key things here are going to be purchase price, appraisal, closing costs, and your cash to close. Payment is definitely important as well. Here's the thing. We're going to assume that you've been pre-approved to purchase at this price, and so it shouldn't be a problem. Okay, so you're buying a house for $650,000. Generally, if everything is working correctly, your house is going to also appraise for that same price. The appraiser does not need to do a bunch of work to prove the house is worth any more than what you're buying it at. So if you ever wonder why they're oftentimes at value, that's why. It's easier to ding the property, and there's no reason for the appraiser to do more work to prove it's worth more, because it doesn't change anything other than bragging rights when you close. All right, so this is a 10% down loan program. So you can see the loan amount is 90% of 650. They've got a rate of 7.25. That doesn't matter here because they're always changing. Rates are fluctuating until you lock them. So just keep that in mind. APR, that's the cost of the loan. We're doing 30-year mortgage. Your buyer's compensation is $16.25. Now, this is assuming that you've signed a buyer rep agreement with your agent saying that you'll pay them that 2.5%. You're either on the hook to pay them, or you're going to get the seller to pay all or a portion of it. But you have contracted with them, hiring them at that fee based on the price of the house. The closing costs that I've used for this are about 3.5%. And that can go up now, and I'll show you where. Our cash to close on this property is almost $85,000. These are all very important. So you want to buy a house that's $650K. You've been pre-approved for that. You have the 10% down, and you have enough money to cover your closing costs. The cash out of pocket right now in this current real estate situation, using the current rules, the agent commission would be essentially baked into the list price of the house. So that 2.5% that you agreed is essentially going to be paid by the seller, relieving you of your obligation to pay them. That document that you sign says you will pay them unless a third party does. And that third party in this scenario would be coming from the seller. Okay, so that's perfect. That's our normal scenario. Now, let's say that you're buying this house in July and we have the new rules where the buyer commission is not baked into the property. This scenario is here, and it's to prove a point, but I don't believe this is accurate and will ever happen, because the sellers are not going to reduce the price of their house just because they're not paying or not responsible for paying a buyer agent commission. So as much as the media is telling you that home prices might be cheaper for you, I don't believe that. Sellers want that money too. You want to save money, they want to make as much money as possible, and the media wants to create a frenzy of conversations around their topic. In this scenario, you have the price dropped by 2.5% down to $633. You've got a new appraisal. Again, the appraisal is lower because the appraiser didn't need to prove it any higher. The loan amount is still 90%, but it's smaller as well. Same interest rate. The commission to your agent, in this scenario, you're on the hook for all of it. Because not only are you not asking for the seller to pay the commission, you've actually reduced your offer by that amount. So you've got similar closing costs, a little bit shy because it's based on a percentage. You've got your payment a little bit lower because the loan amount is lower. But if we look here, your cash to close was, in the original scenario, was about $85,000. We've now jumped to almost $100,000. That single change that everyone's talking about, that the media is saying that, oh, you're going to save money, in this scenario, $84,000 to $98,000. Do you feel like you're saving money? I don't see how you are. Now, if we go up here, let's say you acquired both of these houses and you look, and 2 months in, you're making your mortgage payment. The mortgage payment is different by all of $100. So while that's great overall to save $100 every month, you're never going to notice it. That's going to get used up in gas or Starbucks, a Friday night out, whatever it is. You're never going to miss that money. Is it great that you have it? Absolutely. But you came out of pocket an extra $15,000. That's right out of your bank account. It's gone. So that's a huge challenge. As much as the media is saying that this is going to help the real estate industry and buyers and sellers, you're not going to save money if the seller is also making more money. In this scenario, you paid the exact same amount for the property based on the new rules as you did in the old rules. But your seller actually, if agreed to this, made 15 grand less. Your agent made the same amount of money because you paid him in cash at closing. So who won in this scenario? No one. There was no winner. There's only a loser, which would be the seller in this scenario. Now, again, over here, the seller, he didn't actually earn any more money in the first scenario because he still paid that money. So essentially, he's about even as well. But when we look at this on paper, it looks like the seller's the one that lost. But actually, when we look at the net from both sides, these two deals are essentially the same. However, for a lot of buyers, that cash out of pocket, that extra 15 grand could make or break a deal. And that's kind of scary right now. It's a lot easier on the sell side to come up with that 15 grand because generally, if you're selling, you're going to get cash from the equity of your house, unless you're upside down when you're selling, and that's a whole different scenario. But that money is what was paying everybody, and it just made things easier. Let's go forward now. So we're under the new rules. We have this problem, and you want and you need an agent to help you as a buyer. How do you get that financed? Here's what we can do. You come in here and you look at this same house and you offer to purchase at 2.5% higher, covering your agent's commission. Now you are paying more for the house, but you've already agreed to pay for the service. We're just putting that fee into the price of the house, similar to how it is right now. But it does raise the price. Because of that higher price, we need the appraisal to reach that amount. So we're going to say it worked out, and it did. We've got the appraisal. We've got a 90% loan because that's the program you're using. We've got a slightly higher buyer agent commission because the price of the home was a little higher. We've got a slightly higher cash to close, and your payment is a little bit higher. The cash to close is now dropped back from 100 back down to about 86 grand, a little bit higher just because of the higher price of the house, and these things are based on percentages. But this new third scenario is more in line with what you were doing under the current rules, but using the new rules to still finance your agent's commission, work with the seller, get the property you want, which is all the goal of getting the house that you want at a price you can afford, and making sure that you have representation that's going to protect you along the way. The fourth scenario is one that we use a lot. This is based on you placing an offer and the appraisal coming in low. Where this particular scenario doesn't work very well is if you're buying at 100% loan to value, you're a first-time buyer with barely 3.5% down. There's not enough room in those loans, in those programs, to cover this scenario. But that's only a small portion of the buying community. So here's how this works. You're gonna come in and you're gonna offer that same list price plus the 2.5%. However, what happens in this scenario is the home only appraised at the original list price of $650. So now you have a gap of basically 2.5%, and you have to come up with that somehow. The other thing here that is important is with a loan program, a 90-10 LTV loan, that 90% is of the purchase price or the appraised value, basically whichever one is lower. In this scenario, the lower amount is the appraised value at $650, meaning we can only use $650 and loan on that. However, we still have the money to buy at this price. So what we're gonna do is we're gonna take the loan amount of the $650, we're gonna do the 90% as planned, and then we're gonna add in 2.5% on top of that. And we're gonna get basically up to 93% of loan to value on the loan. So your loan amount is gonna be 93%. You're financing the low appraisal, you're covering that, and you're covering your buyer agent representation fee, all in this program. Nothing's really changed. You're still getting the same rate. It is a little bit more expensive because you're at a different ratio. You're at 93% versus 90%. Your agent's getting their commission. Your closing costs are about the same because that's all based on price, same services. But look at this. Your cash to close for this scenario is almost identical as the one that we would use if we were using the current, what we will call traditional purchasing program of having the agent's commission baked into the sale price of the house and not being a part of this problem. So the key here is on this fourth scenario, you've accomplished two major things. You've dealt with a small appraisal gap, having the appraisal come in a little bit low, and you've been able to finance into the purchase price the cost of having buyer representation, protecting you from future problems or buying the wrong house or losing out to whatever. Because the reason that buyer agency is what it is right now is because a lot of people got bad deals, felt they got screwed, something went wrong, and that's why our contracts are 16 pages long, because every one of those pages and paragraphs that have been added over the years is based on someone in a lawsuit that lost money after purchasing a house. So you definitely want buyer representation. Here's a scenario or 4 different scenarios that show how you can pay for that. And this one, in my opinion, buying at the lowest price and having to pay out of pocket for buyer agency is probably the worst one, because I don't want to come up with $100,000 to buy my house if I could get the exact same house and only pay out of pocket $84,000. How much stuff can I do to my new house with $15,000? That's a lot. I could, new yard, new patio furniture, whatever. There's always things that you want to do. So controlling this cash to close is very important. Now, I've set this up because I am a mortgage lender. I'm also a licensed real estate agent. The other option is when you work with me, I can bundle my two services, getting you your loan and doing your real estate agency at a substantially reduced rate because I'm working for you and you're buying two services from me. So consider that when you start to look at buying your next house. I can help you dramatically save money, and I have strategies that can help you cover the fees that are involved with purchasing a house to help you feel protected if you're using an agent, as well as get the house that you want. Reach out if you have more questions or you want to set up a consultation to talk about loans or real estate.